Welcome traders to our midweek technical analysis. So let's go ahead and go over from let's just start from the beginning of the week. So this is where we first started the market. As you can see, this was the first candlestick here. And obviously we are on our hour one time frame. So let's go ahead and have a look what has happened. So the market opened in a bullish fashion. If you remember from our start of week technical analysis and our post-week market review, before we went into this market, we was anticipating that gold was going to push higher and go ahead and test the previous all-time high of around 3,500. As you can see, that did not happen. What happened with price was price became extremely bearish, and we are at sort of an interesting point for gold as of right now. However, I will come to it. So let's go ahead and take a path and just go ahead and drag the rough moves that have taken place within gold as of right now. So as you can see, we saw this steep bearish drop with price dropping from around 3,450 to 3,382. So a good 700 pip bear run on this hour one time frame. And then as you can see, price then started to consolidate. We continued this bearish fashion with price continuing to make lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, and so on and so forth. However, as you can see, we are starting to pull out of this level. If I go ahead and delete this path real quick just so you can see it in a little bit of a clearer way, you can see that price is consolidating. So I'm talking about this area here. You can see that price is consolidating. We are moving sideways, and what does this indicate to us? This indicates to us that buyers and sellers are even, and we are trading sort of within a fair value gap. We're trading in a range in which the market is quote unquote at a fair price. We're not overpaying and we're not underpaying. We're trading the price at a fair price, fair value. So what does this mean for gold, and what could it mean in the future? So as of right now, obviously we are consolidating. However, if you go ahead and have a closer look, you can see that we are sort of respecting some sort of top resistance, whereas the support is sort of symmetrical, and all the areas are testing within this same sort of area. So we have some liquidation grabs where price comes down. We have some exhaustion throughout the candle, creating these big wicks, and then price ends up closing when the hour comes down to this level. So a couple moves for the rest of the week. So obviously we have our two levels. So obviously we have our points of interest already marked in with our purple rectangle boxes. However, we also have just established a couple new points of support and resistance. So points of interest, places that we want to take into consideration whilst the market is doing what it's doing. So with this first level, this trend line right here, so what we're looking for price to become bullish and break out of this level. So again, before I continue, what we're expecting to see happen here is a significant move, whether it be bearish or bullish. We're waiting, we're anticipating a significant move to either the upside or the downside. For example, if I go ahead and just look at the market with the naked eye, can you see any similarities? Yes, you can. So if you see this consolidation block here, it is very similar to this consolidation block here. The only difference is instead of creating lower highs and lower lows, this one was creating higher highs and higher lows, indicating to us that a bullish move was more likely. However, you know what the market is like. Nothing is ever 100%. Whether you do a million hours of technical analysis and your setup in your mind is 100% perfect, does not mean that the market is going to go that way. That's just how the market is. But we can work out the probability. So what we're going to go ahead and do is we're going to go ahead and have a look at the current probability for both a bullish and a bearish move. So going to this consolidation block that we saw, again, we saw higher highs and higher lows created, indicating to us that we was going to see a bullish move. However, as you can see with this consolidation block, we are seeing lower highs and lower lows created. However, price, in comparison to this consolidation block and this consolidation block, as you can see, we successfully stuck with that same pattern of a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, before we then saw a break of structure of the previous higher high, and price then continued on, eventually giving us a break and retest pattern, and so on and so forth. However, as you can see, the difference with this consolidation block is we have a lot of equal lows and a couple equal highs now as well. So what you can see is obviously starting off this pattern, we saw lower highs and lower lows created. From this, we can then see that price started reverberating. We can see that price then started to move pretty much sideways. So here we can see sort of a bearish wedge. We can see that price is most likely just staggering until it builds up enough volatility and volume to then drop even further. However, price has now sort of smoothed itself out, again having equal lows indicated by this point of interest, this yellow rectangle that we have marked in. So for a bullish move to take place, what we are looking at, if I go ahead and just delete some of these drawings, so what we're looking at in this current area that we are in is we are simply looking for price to break through this resistance that we have marked in with this trend line and price to then continue. However, there is still going to be a couple levels that we want to take into consideration, with one level not being marked. So if I go ahead and grab a rectangle box, you can see that we had, when price came up to this level previously, we saw a couple levels where price when price retraced that acted as a support, and in turn this was the first lower high of this consolidation of this bearish, currently a bearish wedge. So there's a couple places, there's a couple things, a couple confirmations that we want to look for us to then be able to have the confidence to say that we are going to see price continue on bullish. So with that first confirmation, the first confirmation will be if price breaks above this level and then breaking through or breaking structure of the previous lower high. So what would that look like? So that would look like something like this. If I go ahead and grab a path, so let's say price just drops back down again, we test this low as an equal low, and then we push up above this level and then push into this next point of interest. So the first confirmation is that we will see this trend line broken. And the second confirmation is that we will see this previous lower high broken. So we have two confirmations here, and then it's this level that we're going to be taking into account. So it's the level of 3,395. Why is this level significant for us? If you go ahead and have a look in the past, multiple times, once price actually came up to obviously this previous all-time high, price tested upon this level multiple times as a sort of last point of resistance. If price tends to break through that level, we most likely do end up seeing price rally somewhere close, if not past previous all-time highs. So what we're looking at is we are looking at this as a point of interest, so our trend line, this next point of interest, which is marked in by this rectangle box, and then the point of interest that we've just marked in here. So what we're looking for price to for us to be confident in a strong bullish move, and for example price to break this high that was created, is we are looking for price to push through this trend line, push past this point of interest of around 3,395, and then if we see price push past the first lower high that was created, a bullish move is most likely. With the next level that we will be looking at is around 3,425, and then we'll be looking for price to clear these highs here, wiping out any information that we have there, and then continuing on towards this area here, the previous or the last all-time high, which is 3,500. So for a bearish scenario, let's go ahead and delete these drawings just so you do not get confused. So for a bearish scenario or a bearish move to take place within the area that we are currently at, we're looking for price to continue respecting. So let's just mark in our path, so continue respecting, and then eventually breaking through this common support. If price breaks through this common support, obviously we have our sort of secondary sort of emergency support, if you will, at around 3,370. And if price does not hold at this level and act as a support, we're looking for price to come down to around 3,355. So a lot less needs to happen for a bearish scenario to take place. But obviously the first confirmation, or the first thing that we are looking for, is this level of consistent support at around 3,375. If we see that price break through, we're looking at 3,370, and if we see that price surpass, we're most likely going to see a bearish continuation. So As it goes for our midweek technical analysis, I feel like gold is at a nice point as of right now, especially as we are marking up the hour one time frame. Obviously, as you know, the higher the time frame, the stronger the information. The lower the time frame, the more noise you are going to have. So I feel like hour one is a good time frame to mark up. As obviously, if you look at the daily, the information is going to be even stronger. However, you can sort of you can see things in a lot. You can see things a lot clearer on the hour one. You can see what you need to see without seeing too much noise. So again, we're in this consolidation area. We need a few confirmations, as I've just spoken about, for either a bearish or bullish move to take place. However, what we could also see is a continuation of consolidation, but consolidation will never continue. It will never go on forever. And a bullish move or a bearish move that takes price out of this area, whether it's the top side or bottom side, will without a doubt take place at some point in the future. So that's going to be our midweek technical analysis video. I hope you have all enjoyed. Remember, don't forget to like, comment, and subscribe. I know we are nearing 500 subscribers. And remember to join our VIP and stop missing out on our quality and real-time gold signals. So again, midweek technical analysis. I hope you have all enjoyed. I will catch you in that post-week market review, and peace.